Welcome to Keys Open Doors. Today, we're breaking down credit basics. If you're dreaming of buying a home, stepping into the real estate market can feel, well, incredibly daunting. You're out there looking at neighborhoods, scraping together a down payment, and just trying to imagine your future. But before you can finally get those keys in your hand, there's a foundational step you absolutely have to master. It's the gatekeeper to your future home. And honestly, it's a spot where so many buyers get tripped up simply because the whole process just seems confusing. So today, we're taking the mystery out of all of it in this explainer. We're going to look closely at the actual data and the systems that lenders use to decide if you qualify for a mortgage.
Think of me as your trusted real estate advisor. I'm here to guide you through all that thick financial jargon and translate it into plain, simple English. Getting your financial profile ready? It really doesn't have to be overwhelming. In fact, when you understand exactly how the system works behind the scenes, you gain incredible power over your own home buying journey. We're going to dive into the essential facts you need to know, directly derived from core consumer financial education to set you up for absolute success.
All right, so here is our game plan for today. We'll start by untangling the difference between reports and scores. Then, we'll identify some common roadblocks, outline your consumer rights, walk through how to actually fix errors, and finally look at some real strategies for building a strong profile. Let's get into it.
Let's start right at the beginning with Section 1, Reports versus Scores. Many first-time buyers understandably mix these two things up, but separating them in your mind is absolutely crucial to understanding your overall financial health.
So in the simplest terms, your credit report is your history. It's the raw data. Think of it kind of like your academic transcript back in school, right? It lists every class you took, your attendance, and your individual assignments. Your credit score, on the other hand, is the mathematical grade calculated from that exact data. It's like your GPA. Both are incredibly important to your financial health, but they play very different roles. Lenders will look at the score for a quick snapshot, but they really dig into the report to see the actual, detailed story of your financial behavior.
Because of that, you need to actively look at that raw data at least once a year. Why? Well, because a single hidden error can act like a giant brick wall. It could literally keep you from getting approved for a loan altogether. Or, just as importantly, a mistake might trap you into much higher interest rates. And let me tell you, in the real estate world, a higher rate can cost you tens of thousands of dollars over the life of your loan. That drastically impacts what you can afford to pay each month.
Moving right along to Section 2, Common Roadblocks. Look, even when you're being super proactive, you might hit some bumps in the road. Let's identify some of the most common hurdles that could temporarily hit pause on your journey.
You might hear lenders throw around the term thin credit file or no credit file, and honestly, it can sound pretty intimidating. But let's demystify that jargon right now. A thin file simply means you just don't have enough history yet for the reporting companies to generate a score. You're essentially credit invisible. And you know what? This is incredibly common for everyday buyers, especially if you're young, new to the country, or maybe you've just always paid for things in cash. It absolutely doesn't mean you have a bad history, it just means the system lacks the data to give you a grade right now.
Now, another major roadblock, identity theft. This is when someone fraudulently uses your personal information to open accounts in your name. And the scariest part, it secretly damages your financial profile without you even realizing it's happening. The fraudulent debts they rack up drag your score way down and make you look like a high-risk borrower to a mortgage lender. Staying vigilant by checking those reports yearly is for sure your absolute best defense against having your dream home snatched away by a scammer.
This actually brings us to another critical report you should be aware of, especially if you're currently renting while saving up for a home. Have you ever heard of a tenant screening report? It's a specific background check used by landlords. If you've ever applied for an apartment and your application got denied because of something in your background check, it is vital to know that you have the right to request a copy of that specific screening report to see exactly what it says. Knowledge is power, guys, whether you're applying for a lease or a mortgage.
All right, let's move into Section 3, Your Credit Rights. Understanding the roadblocks is a great first step, but understanding the legal rights you have to protect yourself, that's what truly puts you in the driver's seat.
I want to take a quick second here to completely bust one of the biggest myths in the financial world. So many buyers are absolutely terrified to pull their own data because they've heard it lowers their score. Let's be crystal clear about this. Requesting and checking your own credit reports will not hurt your score, period. When you check your own file, it's considered a completely harmless inquiry. You are well within your rights to review this info, and frankly, you should be doing it confidently to stay ahead of the game.
Okay, so let's say you take our advice. You request your report, you're scanning through your accounts, and suddenly, boom, you spot an error.
Maybe it's a late payment you know for a fact you made on time, or an account you definitely never opened. So what comes next?
Welcome to Section 4, Fixing Errors. We're going to walk through the exact recognized method for getting those inaccuracies wiped off your record so you can move forward with a clean slate. There's a fundamental two-step process for resolving these disputes, and it's highly recommended that you don't just complain to one party. First, you should submit a dispute directly to the credit reporting company that actually sent you the report. Then, step 2, you must also submit a dispute to the specific company that provided that faulty information in the first place. So, for example, the credit card company or the bank. Hitting both ends of this ensures the error is investigated properly at the source and at the bureau level.
And hey, remember why we're doing all this. Disputing errors isn't just about winning some argument over a piece of paper. It's about clearing your path. Removing those inaccuracies ensures that when a mortgage underwriter looks at your profile, they see the true, responsible you. It paves the way for a much smoother loan approval process and brings you that much closer to unlocking the front door of your new property.
Okay, let's jump into our final section today. Section 5, Building Credit. If you have a thin file or if you've recently recovered from an error and really want to strengthen your profile, how do you actually go about safely building it up?
Now, while every single financial situation is unique, in general, lenders look favorably on a few key behaviors. First off, consistently pay your bills on time. Your payment history is just a massive piece of the puzzle. Second, keep your balances low relative to your limits, so whatever you do, don't max out your cards. And finally, build your history slowly over time. Establishing a long, steady track record of responsible borrowing proves to lenders that you are a highly reliable candidate for a mortgage. Oh, and this is absolutely critical as you work on building your profile. You really need to know how to spot the difference between a reputable counselor and a bogus credit repair company. Scammers frequently target aspiring home buyers who are just eager to raise their scores quickly. If a company demands high upfront fees before doing any actual work, or if they promise instant, miraculous fixes to your history, run the other way. Legitimate improvement takes time and verifiable actions, not magic wands and expensive upfront fees.
Now, as your educator today, it's really important for me to remind you that the information in this explainer provides general consumer education. It's not personalized legal or financial advice. Because everyone's financial picture is totally unique, we strongly encourage you to always consult a licensed financial professional or a certified counselor to discuss your specific, individualized situation before making any major financial moves.
But honestly, when you understand your reports, your rights, and how to fix errors, the whole home buying process becomes so much less intimidating. So ask yourself, what is your financial GPA actually saying about you right now? And are you ready to take control of it today? Keys Open Doors, helping you unlock your path to homeownership. If this helped, like, comment, and subscribe.